Welcome to Fintech Brews and News, brought to you by Central Payments and Falls Fintech. I'm Nikkee Rohde.
And I'm Trent Sorby.
Founders, co-founders, payments professionals, and, well, just people who love brews. This is a place to get a behind-the-scenes look at unique partnerships and ways to bridge the financial gap between banking, startups, and the entire fintech industry. Whether it's a beer or coffee or something else, there's certain to be a brew in every episode. After all, how do we function in this space without it? Each episode, you're sure to take away some good stuff going on in the financial technology space. So without further ado, let's grab a brew. Hey guys, welcome back to another episode here at Fintech Brews. I'm Nikkee Rohde, along with...
I'm Trent Sorby.
And we have a brand new conversation to talk to you today about. But before we do, again, a delicious... we're both sporting
it today.
The Wood Grain Brewery right here in Sioux Falls.
Right over here.
Happens to be in the same building here as Falls Fintech. And so we're super grateful that they continue to pour out great brews. Again, not sure the name. I think it's an IPA. Once again, fruity, delicious, and always good.
I'm having the Helles today, like I always have, the Helles Light Lager. It's my favorite.
And simple. So we're going to keep teaching him to go farther.
The goal of the podcast is to expand my beer choices.
And your coffee choices.
Also,
Just
yes.
black. I mean, there's something to be said about keeping it simple. So I'm going to give you that. Welcome back. Today we're going to be talking about bank as a service. And not just bank as a service, but what we like to think of as real bank as a service. And so I'm going to pepper Trent with a bunch of questions about what that means and why do we think the word real is so important in this equation, and some other really cool things we're doing to make technology at the forefront of banking. So, cool?
Cool.
Right on. So let's start, first of all, at bank as a service.
What a stupid name.
What a stupid name. I think we had one time talked about bank as a service, platform as a service, software as a service, and as a service. So it's like all the asses in the industry.
So many asses.
So many asses. And so you can't really abandon the idea of bank as a service, but we can slap this real label on it. And what does that mean? Why real bank as a service? First of all, what's bank as a service?
I knew you were going to ask me that. So really, bank as a service has come out of this concept that in order to offer financial products, that you were oftentimes faced with this idea of having to connect into legacy systems where you weren't able to pick services that you wanted. You had to sort of just take it all because that's all the system or the platform was capable of. Bank as a service has really come around and really revolutionized this idea of picking and choosing many services that you need from multiple parties potentially, and doing it very conveniently and easily within an API environment, and really finding a way to build products much more efficiently, much more quickly, without having to involve legacy systems. And so, just like SaaS products and BaaS products, and like we were joking,
asses.
so many asses. Banking as a service has really been this phenomenon over the last, I want to say maybe 3 or 4 years, where companies, including Central Payments, have come forward and said, look, we're going to build this platform where you can come in, take the product, could be a product out of Falls Fintech, could be a product that comes to us organically through our own biz dev channels, and say, ingest pieces of our platform that work for you, and take just what you need.
So that's really this kind of menu approach too of simplifying. When you think about, we talked in an earlier episode about fintechs and banks and partnering, and banks kind of being beholden a bit to this clunky regulatory environment that just is what it is. And so dealing with a bank can be difficult. So bank as a service is really helping streamline and simplify doing business with a bank. Is that true in our case?
To some extent. And before I talk about our case, I think you bring up an excellent point. For a lot of bank as a service platforms, the one piece that hasn't been solved for ironically as it may sound, is the bank. And so you have bank as a service products out there, or services or platforms that don't have a bank involved, or have a bank issuer in the background that isn't part of the platform technologically. And so, one of the things that we looked at as we looked across, bank as a service in general was like, wow, our charter is a competitive advantage. I mean, we really do think we're one of maybe 2 or 3 platforms out there that have a charter embedded in the service, just like we have ID verification or anything like that. To the point you made around the difficult regulatory climate, it's complicated. It's complicated for fintech. And so to have the bank as part of the platform, we think drives a whole lot of efficiency compared to those that offer many of the same services, but then say, oh yeah, then there's also this third-party bank, not really integrated all that much, whole other party. You would need to foster a relationship with them. That relationship can be a bit tenuous at times.
Well, and that's kind of what I was thinking about too, is true or false, bank as a service as we know it out there today, where there's a bank somewhere downstream, if that bank gets a little bent out of shape or uncomfortable in some way, they can say, we're out. And then that bank as a service platform is now stuck without a bank.
I would argue it loses its foundation at that point. The whole authority to be able to offer products rests in the bank charter. And so while the technology is certainly out there from non-bank providers, and it's compelling technology, that's for sure, I do worry that fintechs out there are underestimating the importance of that bank relationship and the need for that to be a very embedded relationship.
When we think about real BaaS, how do we do that? Talk about what it is.
Yeah. In 2019, we built a platform that we call OpenCP. And OpenCP is effectively a series of microservices, all API driven, entirely cloud-based, that provides users with access to effectively every major financial services function you need, from customer service to IVR to card production to ID verification, et cetera, et cetera, et cetera. And those services are relatively consistent across all the providers, where I think what OpenCP has done for us, and where we try to draw distinctions when we have an opportunity, is to point out that so embedded in OpenCP is technology, charter, and choice. The technology feels relatively straightforward. Microservices, API, entirely cloud-based, certainly one of the very few native cloud platforms out there. Mm-hmm. The charter is what we've been talking about, right? Bank charter embedded in the service. We are a bank. The choice aspect, I think, sometimes gets overlooked in the sense that within each one of those microservices, and let's just say it's ID verification, for example, we're going to bring 3 or 4 solutions to market within that from 3 or 4 different providers. And so it allows our users to come in and have some choice within the platform.
Talk about that for just a second. Sorry to interrupt you, but why is choice so important?
A lot of times, certain vendors in the ecosystem are better at certain aspects of payments than others. There may be an ID verification company that is particularly good at document scanning or selfie pictures that do imagery and that kind of stuff to help you. They may be particularly good at that. Another one may be really good at verifying identities of non-resident aliens, for example. So bringing choice into it allows users to effectively cascade their ID verification process to say, look, if I need this, I'm going here. If I need this, I'm going here. And I need this, I'm going here. But I never have to create relationships with all those parties because I'm getting it in OpenCP. I'm getting it in Central Payments Bank as a Service platform.
One of the things that we often hear is, how have I never heard of you guys before? Where have you been all my life? If this is what you're saying it is, and you're the bank and you provide all the vendors, by the way, at a pricing advantage from a volume perspective of everything we're piping through there, why has nobody heard of this before?
You're right. We hear that all the time. I think one of the main reasons is that we haven't had a need to be venture capital backed, which means we haven't had a need to be particularly outspoken in the PR realm of things. We aren't in a constant fundraising mode. We are profitable. And so I think the success of OpenCP and our bank as a service platform has a lot to do with the fact that it is here, it's stable, it's the bank's embedded in it, and we haven't had to be out there talking about it all the time. Now, do we need to talk about it more? Sure. But for the most part, what we're finding is companies that come into us, whether they're a fintech startup that's looking for an embedded solution, there I said it again, a fintech startup coming in and looking for an embedded solution because they want to focus on UI and UX, the bank as a service platform serves that need really well. Or it's a very established company, big brand, coming in and saying, I want a one-stop shop because I don't want to put all the pieces and the parts together. I am not a financial services company. I need a financial product. And so efficiency is key, vertical integration is key. And I think when we have a quick conversation with them to say, did you know there's not this third-party bank issuer out there that you have to go connect? We're your bank too. We sense light bulbs going off really quickly.
Yeah.
So it is a different, because we haven't had to try to grab headlines everywhere in order to raise money, draw business, et cetera. So much has just been organic, and the platform is financially supporting itself.
One-stop shop is such a good word to use, because on the Falls Fintech side of the house, company comes into the accelerator expecting to get some mentoring, some curriculum, some industry literacy, financial literacy stuff, and how to do this well. But in addition to that, of course, they get a bank partnership. But then, and wait, there's more. Call in the next 30 minutes. No, but wait, there's more, is here's a technology platform too that gives you an API connection into our open environment to go and establish and fully set up your product with one connection.
Think of yourself as as one of the startups that you deal with in Falls Fintech. You are burning cash. That's the reality of the business, right? And now you're having to go in. You're thinking about, okay, I've got to build a bank relationship. I got to build a processor relationship. I got to build this relationship. A, those take a lot of time. B, they don't always come together. In fact, they rarely come together at the same time. And C, they're going to be very expensive, big implementation fees, et cetera. And so one of the things that OpenCP has done for the startup fintech community is it's brought the ecosystem to them, brought in an element of choice, and not brought in large time delays and huge upfront financial commitments. They get the benefit of our relationship with top of mind providers in the space.
And the regulators like that.
Yeah, I think in the end, OpenCP is a risk management tool for us. When we become more of a hub and less of a spoke, the traditional sponsorship model for a bank, you're not in the middle of the data exchanges on any given day. Everything is done a bit removed, a bit on a day lag in some cases. OpenCP not only has been, warmly received by the marketplace, but I think it's really bolstered our risk management because we're able to really be entrenched with our partners.
Entrenched, new combination of embedded.
I tried very hard there to avoid embedded, but it really allows more of a hub versus a spoke approach. And that speaks well to all of the folks we have to answer to on the regulatory side, the legal side, and frankly, what we like is that it forces a deep relationship with that partner, and it forces the partner and central payments to really build together.
That's right.
We're not as expendable anymore as what I think traditional bank sponsorship has been. We come up the food chain, if you will, in terms of the value prop that we bring. So for us, bank as a service, it is the business now. I think we were bank as a service before anybody knew what it was. We just didn't know what to call it.
It's kind of like people that say we were fintech before fintech had a name or a brand.
Exactly.
And so again, back to the regulator component, you hear this all the time, right? Where they say, but how do you, if you were a sponsorship model, but how do you really know that your partner is doing X, Y, and Z? And with OpenCP, it's, again, mutually beneficial where the fintech or any other provider of financial services wants to connect with us. We know because it's all connecting in and through us. We have the autonomy.
Yeah, take a simple example. How do you know third party is properly validating the IDs of the person coming in?
Right.
Well, we know because they come in, tell us to go run it. We then get the approval, communicate it back to them, and then we board the account on the processing platform. So if at any point there is a problem in that, we're in the middle of the problem versus I'll know tomorrow when that report comes in to make sure that that the program is behaving as it needs to.
So I'm going to take a little bit of a different swing for anybody that's listening that's like, okay, cool, get it, but I kind of still don't understand. Why can't I just go to another BaaS provider that's out there today and seemingly get most of what you're saying you're offering? Like, what's the differentiator beyond kind of what you've talked about? It's charter, but what else?
I think it's the first question I would ask is, are you profitable today? Because I'm building a business on top of you. Mm-hmm. So what is your financial capacity
if
right
you're
now?
a fintech, you're asking this,
yes,
right?
Sorry.
Okay.
And so I think one of the questions I would ask is, are you profitable? Are you a going concern? And what are you going to do if we reach a spot and it becomes tough for you to raise money to keep feeding the cash burn that we know is going on? I think the second question is, who is the bank issuer back here? How untethered are they from your platform? And hey, I'd like to talk to them. Maybe I just want to meet with them too. Can I do that? And what if I want to choose a different provider? What if they're uncomfortable with me? Then what do I do? What if they become uncomfortable with me? So as I think with embedded charter, again, I go back to what I said. When you're talking to us about technology, you're talking to us as your issuer too. The two are, completely aligned because we can't do either one without the other, and we don't need to go to a third party, or the fintech doesn't need to go to the third party and convince them, hey, I'm working with XYZ platform over here. You're really going to like me, Mr. Bank or Miss Bank. And I just think it just creates a more vertically aligned relationship.
Compliance, legal, really, 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 really important things to be mindful of. We tell every fintech that comes in through False Fintech, if you're not thinking about compliance, do it right now. Stop what you're doing. Think about how this is going to fit in the market, what regulators are going to say about this, what legal counsel would say about this, and what we constantly hear, and we know, but a lot of fintechs don't know until they hear it firsthand, is the bank is your most important relationship. And
so doesn't it make, I'm sorry to interrupt you, but doesn't it make sense then, if the bank is the most important relationship, why are you one step removed in another model?
That's right.
It doesn't make sense to me.
Yep.
If the organization or the partner that can be most impactful to the future of your business, you can't call, you can't talk to, you can't visit, you don't know many of them, you've never been anywhere to see them, that feels tenuous to me. And I think in the end, when we go back to this concept of what's real bank as a service. Real bank as a service is you're piping in to not only our technology but our charter at the same time.
That's right. The other thing I think about when it comes to OpenCP being the platform, there's no throwaway code in that. When you pipe in, when a fintech or anybody for that matter pipes into OpenCP for the sandbox to try and do the things, when it's time for full market launch, whatever you've already done is virtually a flip of a switch or a key exchange, not a technical guy, of some sort. But should you choose to use a bank as a service platform other than something like what we've built, you might have a different bank down the way. So everything you've coded to could be throwaway code. Is that true?
I think that's a real risk. Or worse yet, what if you run into a problem and you come all the way through the sandbox environment, you come all the way through the CV environment, and then third-party bank who you haven't really had many relations with says, not really interested. Or we're really busy right now, talk to us in a year. Well, what have you done for the last 6 months? You've built a product. You've really put yourself in a very vulnerable position. So I think folks that come into OpenCP know going in, it's the bank from the beginning. And barring anything unexpected, the bank's going to carry you through all of those phases, all the way to market launch. And that's just one of all the things the fintech is wrestling with. The average founder has 100 things going through their mind on any given minute. I just think it would be nice for them not to have to worry about their bank partner at that point. They've got plenty of other things to worry about.
What's next for OpenCP? How do we keep evolving this and meeting everybody's needs?
Choice. Building out the ecosystem more, doing new things, more providers, more cost efficiencies, just bringing best in class through the whole platform from beginning to end. And I think that's going to be important, not just for, we've been talking so much about the startup fintech, but it's really important for the big brands as well. The big brands that want to come in and have assurances that they're doing business with financially stable companies with great reputations, companies that have, an excellent reputation for stability. And so it's incumbent upon everybody at Central and OpenCP to just keep feeding that from a product standpoint to support as many ideas as possible. All the brands are thinking about ways in which they can monetize financial flows going on within their product. And it really doesn't matter what the product is. Mm-hmm. It can be rideshare, it can be mobile carriers, it can be payroll providers, it can be, the list goes on and on. But what they're watching is all of these financial flows going back and forth within their business and saying, hey, how do I get in the middle of that? Because I'm not really involved in that today. And there's maybe a way to monetize activity that I already know is going on. And that's really where they get excited about bank as a service, because it is plug and play for them. Mm-hmm. They don't need to be a bank. They don't have to go build the ecosystem again themselves, turn themselves into a financial services company, which many of them don't want to be.
Which is expensive and lengthy.
Right, mm-hmm. Exactly. So, we think, I think bank as a service is probably the most important thing going on right now in fintech and in payments and really in banking. I think users are going to fall in to top of mind brands that want to embed financial services in their product. And then I think it's probably fintechs that think of themselves as apps in an app store that want to connect into a bank as a service provider in order to create what really feels like open banking in the US. We don't have true open banking here like they have in Europe, but I think bank as a service is as close as the US has come. And I think it's going to be great for these user experience applications that are out there. We've got some great examples of them that are using us as sort of I always say it's sort of like the old days. Back when at your age, it's sort of like it's sort of the old days of prepaid, where we used to call them stored value cards. I think that's really where financial institutions are going to find themselves. They're the custodians of value. The applications that consumers use to do the things they want to do are going to change, and they're going to vary all the time. And one's going to be from one company and one's going to be from another company. You have to wait to connect to the consumer wants to connect all those apps to you. Mm-hmm. And you need to be the custodian of value in that thing.
Yeah, makes sense. So take me to the next step of theorize what's happening next in bank as a service. What's going to happen?
I think you are going to see what I hear this concept all the time about the super app, the app where you're going to be able to go into one app and handle financial services, wireless, streaming television services, everything in one place. I think that's going to have the financial services component of that is going to come through bank as a service, and it's going to be these large aggregators building these super apps. They're going to need bank as a service. They're going to want that because they want open banking to let their users plug in to their super app, regardless of whether they have a bank account at, First State Bank of small town South Dakota or J.P. Morgan Chase. It's really in my mind, it's the democratization of banking right now. And so it'll be really fun to watch. And I think if you embrace open banking, if you embrace the idea of being infrastructure and being stored value and letting companies build fascinating applications out there, I think that's the future role of financial institutions.
Always bringing it back to brews, like Starbucks, right? Starbucks, you go and you have this hefty menu, and what's an Americano, and what's a chai tea latte, and all these kinds of things, and it's complicated. But OpenCP is kind of all but made a way to give people choice, pick what you want, and we guide you along the way of here's what it is, here's what you can do with it. and kind of keep it simple, but let the control be in.
It becomes very communal. Users will begin to talk to us and other users to say, have you thought about this? Have you thought of, I figured out a really cool way to do this. And all of a sudden it becomes a bit of almost open source where we're going to find folks developing on top of us that are sharing ideas with others that want to develop on top of us. And pretty soon all new processes are going to come out of this. So it's very, very organic, and it's just really, really exciting. For us, it's keeping up, where's the future of this? It's all the pipes that we have to continue to connect. We aren't at a spot where consolidation is happening yet. And so there's always going to be different ways in which money can move. You hear me say it all the time, like we're just moving money.
Yeah.
Now, the rails that those money movements run on, I don't see that stopping anytime soon.
Right. Real-time payments, faster payments, different channels and forms of payment. So
same day ACH,
that's right.
All of that stuff.
Yeah. So why don't other banks do this?
I think there's probably, we enjoy a couple of unique advantages. One is super, super large banks find themselves, restricted by law, right? The Durbin Amendment says if you're above 10 billion, the interchange you earn on payments products like debit cards and prepaid cards is substantially less than what banks under 10 billion would earn. So you sort of have a bit of a natural barrier to entry there. And plus we all know large banks don't move quickly. They'll be the first to say it.
Yep.
They recognize the threat. I mean, JP Morgan Chase, Jamie Dimon in his annual letter to shareholders was very clear. They view fintech as a significant threat. Then you have, so that sort of leaves us with banks under 10 billion. Those that are still tethered to their core processing platform, those that still think everything they do technologically has to come through one of four companies providing their core platform.
Right.
I think it's very hard for them to wrap their head around philosophically the idea of untethered cores.
Yeah.
I know the first time, as we talk to bankers and bankers associations, I say untethered core, and you can just kind of see them like just.
Right.
And it takes a big investment, right? You have to have expertise, and you're going to spend a ton of money getting into it. So we're kind of in this spot right now where there aren't many banks doing this. There certainly are some, and many of them are VC non-bank providers that are going out there finding bank partners in there, because I think that's the banks themselves don't want to build that infrastructure. Not many banks want to build that infrastructure yet. So you still have this slightly inefficient model where the technology, as cutting edge as it is still finding a relatively archaic way to connect to small banks that don't want the technology or can't build the technology themselves. We said from the get-go when we came into this thing, like we said in episodes 1 or 2 or something, that we knew when we came into payments, we had to be technology forward to differentiate from our competitors. It's just that it's very fortuitous that timed out very nicely with this, this big wave of fintech and bank as a service and all those things. We timed it well.
Yeah, that's right. Well, and I think our expertise too, the staff that we have on board. I mean, you're adding more people to the real bank as a service, the open CP vertical of Central Payments than anywhere else.
Look, we never say sponsor bank at Central Payments.
It's a 4-letter word.
It is to some extent now, and we also try not to say bank very often. I mean, we're a platform company. Mm-hmm. The charter, the capabilities of the financial charter is an enormous service that not many have, huge differentiator. But in the end, it's just part of the platform.
That's right. Perfect.
Bank as a service, 20 minutes.
There you have it. Real
bank as a service.
Bank as a service. Thanks, Trent. Good insight. Yeah. We'll catch up with you next time. Cheers to that.
Cheers, friend.
See you next time.
There you have it. We hope you enjoyed this episode of FinTech Brews and News. Keep up with all the content and cool stuff happening at Falls FinTech and Central Payments by checking out our website, our YouTube channel, LinkedIn, and Twitter. Subscribe to this podcast so you don't miss out on our next episode.
I'm Nikkee Roby.
And I'm Trent Sorby. See you next time. Cheers.